Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with the market update. Last week, the US dollar index held steady around the 99 mark, despite softer than expected September CPI data. The greenback started the week firm but gradually lost momentum, finishing slightly higher and erasing the prior week's pullback. Traders are now in wait-and-see mode ahead of next week's Federal Reserve meeting, where markets widely expect a 25 basis point rate cut. Still, if inflation surprises on the upside, renewed tariff concerns could lift the dollar again. WTI crude traded above $61 on Friday, closing out the strongest weekly rally since early June, up roughly 7%. The surge came after Washington imposed fresh sanctions on Russia's state oil giants, sparking fears of supply disruptions. China's and India's refiners reportedly cut purchases to comply, while the EU targeted Russian energy infrastructure, escalating tensions. Looking ahead, if US-China tariff talks show progress, oil may see a short-term recovery into year-end, though the broader trend remains mildly downward. Gold prices tumbled more than 5% early last week, briefly dipping below $4,000 before rebounding to around $4,100. The sharp sell-off ended a 9-week rally and marked the biggest one-day drop in 5 years, as investors took profits after repeated record highs. Outflows from gold-backed ETFs accelerated, showing the largest single-day decline in holdings since May. US sanctions on Russian oil majors reignited safe haven demand, while expectations of 2 more Fed cuts by year-end continue to support bullion. All eyes are on the Bank of Japan's October 30 policy meeting, which could reshape global markets. With US tariff threats fading, the yen's volatility rising, and Japan's politics shifting, investors are asking, will the BOJ finally hike rates? Recent data suggests resilience exports grew in September and business sentiment improved, hinting that tariff fears haven't derailed recovery. Inflation pressures are building, giving the central bank more confidence to tighten policy. Despite upbeat business surveys from Germany and the Eurozone, the euro-dollar pair stayed range-bound last week, finding firm support above 1.16. October's PMI readings showed manufacturing unexpectedly expanding and services growing at the fastest pace in a year, strengthening the case for the ECB's hawkish hold that tempered hopes for near-term policy easing. Overall, sentiment remains focused on next week's Fed meeting and the upcoming Trump-Xi talks, which could set the tone for both risk appetite and the euro's next move.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.